What is up, guys? It's your boy GRC. We're coming at you live every single day at 11 a.m. Eastern, crypto in the morning. How is everyone doing today? Everything's plugged in. We're good to go. We're going to be talking about DeFi today. I want to try to stay off the FTX subject a little bit because my brain cells are starting. I don't care how corrupt they are at this point. I just hope, but I do care how much liquid Bitcoin and Ethereum is on the market for sell. So that's kind of a critical piece of this, right? There is some liquid Bitcoin and Ethereum and stuff that they're talking about on these exchanges. And I just want to know, is it all going to dump? Is it not all going to dump? Whatever. We'll figure it out. We're also going to be talking about liquidity providing today, bouncing back and forth through some of those nuances. We want the chat to ask questions. Okay, so if you have weird nuanced questions that you don't think anyone would want to answer because they're stupid, that might mean that it's a good question. So go ahead and drop some questions below. Today's a chill stream. It's a weekly recap. I want everyone to chill out about the FTX stuff. I want everyone to understand it's just good points for DeFi. Richard Hart made a big media run this weekend where he really laid down the law about some of these very key points, the detailed points about the liquidity within DeFi. And these guys had no idea what he was talking about. And these were rich men. And to understand that we're so new, Sam, we're so new. We're so new. And people are literally figuring out these pools. People are figuring out all this stuff. And it's just confusing because we're so new. Don't think people are all stupid. That's not really the truth. The truth is we're new. Everyone could learn this information. And everyone could earn fees and stuff. And some people would want to do that if they understood. Some people I could understand would feel more comfortable in a V2 setting. But in V3, if you're locked and loaded, money in the bank. Oh, never mind. Anyway, crypto in the morning, guys. Every single day. I want likes, smash. Can you please explain what RH said about putting up liquidity on one side to avoid slippage? Absolutely, brother. Jamal, come on. That's awesome, man. And I know that part of the clip, maybe I can find it. Maybe I can pull it up. If any of you guys have any part of that clip that was dynamic on those Twitter spaces, I'll pull it up. If you have anything you want me to pull up today, me and Sam are going to be going back and forth, interacting with the chat, and I hope everyone is doing good. Don't get fudded out of your bags, fam. This is the time where you need to focus. The next 3 to 6 months is critical, and you don't want to be on the sidelines thinking, oh, man, I sold all my stuff, and I don't even care anymore. And then 3 years goes by, and then the Bitcoin pizza talk starts happening again, and you're wrecked. So everybody, hit the like button.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. Smoking no blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stake. Got me some heads on, I'm making it rain. Pay me some maxi and that's just in case. Jim Reddit sent me to show you the way. DeFi Pro, yeah. Crypto in the morning. 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 Crypto in the morning.
Yo, what's good? This is going to be a good show. I see some comments coming in here from Jordan and from Jamal. I'm putting together a little chart so we can actually get into that. I'm excited. The more bearish the market gets right now, the more excited I have been about what's actually taking place, because it creates more opportunity. If you can go through and you can buy something at another 15 or 20% discount on something, then when it goes up, it actually has an amplification effect, because when you do the math on it, that's how it works. If you have $100 and it's $100 now, and then it goes down to $80, it takes more than a 20% growth to get back over 100%. If you do the math on it, we can do the math on it, but trust me on it, it takes more than 20%. Even though you have a 20% drop, it takes more than 20% to get back above $100. So buying shit at a discount is basically investing in steroids. You want to say hi to Pacific right here?
Yeah, Pacific, great to see you this morning. Thank you so much for the $10 super chat. What's up? What's up? We really need a good walkthrough of some LP, actually a screen in MetaMask and some visuals. So Sam, don't do it now, but we will do that. So what we'll do is we'll pull up Uniswap and we'll show people how simple it really is to go through some of these processes. And it's confusing because you don't know what's going on, but it's not hard. It's simple, but we just have to walk through it and learn it.
That's actually something I don't know. I have a dummy wallet on here. I don't know how much money I have in it, but if I have enough to set up a position, I can show exactly how to do that. And LP is something that I really, really enjoy talking about and learning about and
100%. And I might pull up, this is what we'll do, Sam. Why don't you get that Uniswap front end ready? I'm going to go, there's a really good LP explainer video, and I love doing them before we talk because, Sam, let's be honest, we go off the deep end in like 7 seconds. And having those 10-minute videos where we can just sit there and watch are good. So, guys, I want biceps in the chat. We're going into a liquidity providing deep dive. It's happening in real time. And I was inspired. Go ahead.
I'm putting together some stuff now, so we can show some people how to do this. So
keep adding your comments in. I'm starring all of them, so I'm going to get back to all these questions, and we're gonna look into some liquidity providing talk. So remember, guys, liquidity providing, and I'm going to give my little run about what it is because I know people are new here too. So again, I told Sam I wanted to keep this one as simple as we could in the beginning. Liquidity providing is nothing but you taking your assets and becoming the pool from which other people trade in and out of that asset. So if I started a GRC coin and there was I would say, okay, I have all this GRC coin. I'm going to make an ETH pair, but I have to use my ETH. I have to put up the pair. I have to take the risk of the downside. And that's how LP pools start. You put $1 in and you attach another coin to it that has no value yet until people start trading in and out of it. So remember, it's 1 for 1, but the people that provide the liquidity when guys like you and me come in and trade, oh, I want Hex, I want ETH, they earn fees in the pool, and that's the bread and butter. Has there been much upward price action on Hex? No, but I can promise you there's someone earning thousands and thousands and thousands and thousands and thousands and thousands of dollars per day providing liquidity in that pool. So it's false to say that they're not earning money from Hex. That would be false. Just like Icosa's number might not go up to $100, but if one person has all the money in the pool, Sam, they'll be making $8,000 to $20,000 in fees per day if they had all of it, or whatever. Like
whatever the fee pool is, yes. If you can represent a larger portion of the fees that are generated, so you can check out this at info.uniswap.org and you search for whatever pair you're interested in. When you pull that up, you get to see how many fees are generated over a 24-hour period. So if there's $20,000 worth of fees in a 24-hour period of time, that's a very active pair, right? And there's 2 ways you can go through and get a bigger percentage of the fees that are earned. By being a larger portion in the pool. So say if the pool is $100,000 and you come in with another $100,000, right now you're 50% of the TLV of that pool. The other thing you can do with V3 only, you cannot do this with V2, like Sushi Swap, like Pancake Swap, like any other swap but V3, is you can have a concentrated position. So even though maybe there's $100,000 of TLV, total value lock, your 20 grand in that pool could represent more than 20% of the pool in terms of fees.
We got to open that up again. It's so true. That's a really good point. Now you're explaining it so perfectly. I'm sorry for breaking that up. But can you dive into that point a little more? Just take just a hair of a step back and like just start from where you began like a minute or two ago. So I was looking for that video.
So you have pools, as GRC was saying. You have a pool A, like a pool between two assets, A and B, we'll just say. And that pool, when combined, has a TLV, which is a total value locked. Now, if that pool generates $5,000 of fees per day, right? These things are 100% possible. We can actually look at some pool fees in a moment. And you want to earn some of that $5,000 per day. And let's say the pool size is $100,000. That means asset A and asset B combined together equal total USD value of $100,000. That does not necessarily mean 50% of A and 50% of B unless you're using V2. V3 could be 70-30, could be 43-67 or 37 or 57, whatever it is. Now, if you want a larger portion of those fees, there's two things you can do. You can go through and increase the amount of money you put into the pool, as in there's $100,000 in TLV and you add $100,000 more. Now your position represents 50% of total fees, meaning that $5,000, you earn 50% of it, right? Now, the other way to increase the amount of fees you earn per day from that pool without increasing how much money you have in there is by having a concentrated position. And I'll just share this for a second here.
Please do.
This chart here, right in the center, this portion that's not like a straight line in here, this is effectively people who are interested in earning higher fees. So in this area, there's concentrated liquidity. So if you want to earn a greater portion of that $5,000.
And that's what the big innovation would be between V2 and V3, guys. That's it. Like there's a couple things that happen because of that. But in general, the liquidity, it's so different. It's so dynamic. It's so much more fees if you know what you're doing, and so less fees if you don't know what you're doing, and you can get screwed a little easier. But you can also, if you know what you're doing, you're not going to get screwed. You're not going to get screwed because you're only going to use assets that you want both of legitimately. And that's how you don't get screwed. Literally.
Correct. And we can go through and like
Hedron or Hex, like, oh no, my life's over. I have a big fat bag of Hex. No. And what are the other way around? No. So it doesn't matter. But if you do it between Shibu Inu and PLSD, which I'm sure there is a pair or whatever pair it is, there's going to be fake liquidity. It all comes down to fake liquidity too, Sam. Propped up liquidity. You're studying these pools of real DeFi pools. You won't see that anywhere else, Sam. You won't see that pool action anywhere else in DeFi because it's just one dude providing all the liquidity and like other dudes with like 1%, like the smallest percentage of it. I think we're in the most dynamic actual user markets that there are in cryptocurrency.
We talked about this yesterday. Like crypto is impacting people in the way where like I do business with somebody in South Africa and I don't have to send them a wire transfer, fill out all this information, have the dude's name, have his address, have his bank, have his routing number, his ABA number, like all of this information to be able to send a wire that is extremely expensive and can take several days to do. I can just send him money in crypto like that. So this is a giant use case for crypto.
And people still want that wire, Sam. I've had people ask me for wire just on my feet thinking about it. Like there's people that have asked me for wire that accept crypto as well. So maybe they're making you have to go through a bunch of bull ass to do it on my end. But if somebody wants that because they don't want to get 20% or the fees or whatever they feel like after they get it all out. Some people don't. You can have too much. Well, no, these people have crypto too, though. Like, but sometimes you have too much crypto and you want a little in your bank account, I guess, too.
Yes, either because you want it in a specific location or just familiarity. People are
And bills come out of certain areas too, like, so I guess to speculate on that would be silly.
But the other big thing that crypto does that is the first time in history is it opens up the marketplace to everybody. Everybody with the internet can now have access to the marketplace for financial assets that has never, ever happened in the history of the planet, ever. And most people focus on the coin, right? Oh, Hex is cool, right? I agree. Hex is cool. Hedron, etc. I agree. Hedron is cool. But not very many people focus on the liquidity. And the liquidity, because we're using things like V3, allow us to be the market, meaning we earn the fees. And I used an example the other day of a farmer's market. Would you rather own a stand in the farmer's market or own the farmer's market? I'll own the farmer's market because I earn all the fees from the
lot. Yeah, just own a lot that they go on because they usually just plop up on a parking lot. So if you own that parking lot, I'm sure you earn 10% or whatever they have to pay. And you do that every week and you don't have any overhead.
Per user too.
Already bought it.
Per user, right? So if I have a farmer's market and there's 86 vendors there, and I charge $50 for a small lot and $175 for a larger one, and it's times 86 people, and I don't have the overhead on that, yeah, I'll take those fees. And this is the first time ever where anybody has access to this. Why do you think Wall Street has gotten so rich? Because they own the liquidity. They own the market. They own the market. And if I own the market, I take a fee. Why do you think Richard Hart wants to own Paul Sachs and have the most liquidity there? So he can take a piece of it. That's how he structured it. He wants a piece of the liquidity because he knows that's how he's going to generate a shitload of money.
Or, it also helps to have a big buy wall at certain levels, right? Like but it's safe to say if you think you're going to be sideways at a level, if you have insight that you're going to be sideways at a level for an extended period of time, it's a good way to do it. Like no one else is going to do it properly, right? You see that in other liquidity providing charts, Sam, that you look at that aren't as legit, I guess, maybe, or like as known or as dynamic would be the word for it. And then you see some like Hex that are, you could predict-ish what the Hex one's going to look like when you wake up in the morning for at least the last couple hundred days. So what happens if you increase liquidity to increase fees, but you over provide the market with a bad judgment of someone sells into your larger position effectively using your capital as exit? Well, that's why you have to decide that you want both assets before you do it. Like if I'm providing between ETH and USDC, I truthfully do not care which side of that bargain I lose. I just don't. I really don't. Like if I lose and ETH goes to 750 and USDC, okay, man, I made a bad decision, I guess. But these all things go over time and we're all bullish over time. Even if you make the worst liquidity providing move in history, you can just hodl that bag and you could probably stake it if you wanted to, and you could just exit the position, but you have to decide that you want both assets truthfully, like between Hedron and that's why when people start mentioning Icosa, I just hold up for a second. When I was talking about Icosa, there was $32,000 in liquidity in the pool. And after I started talking about it, now there's a little bit more. So it's a little different. These things are dynamic. You have to understand the crypto that you're using in that market in particular to a degree, unless it's like super safe in your opinion, like USDC or ETH, I guess.
So on this, Silver, what's good, bro? Good to see you here. So like GRC said, the bad judgment is in picking a bad pair, right? Like if you choose to provide liquidity, period. Can you pull that back up for a second? There's something in there I was going to actually talk about real quick. If you choose to provide,
and this is my man Silver, by the way, and one of the most popular episodes on my show ever was my man Silver. So Silver, if you want to come on at any point, please.
So to go on maybe a little bit more nuanced than what people are going standard here, you were 100% correct, GRC. But if you want to think about this a little bit further, because that kind of answers his question there. But if you are opportunistically trying to exit a position, right? Because we're going to talk about range orders and avoiding slippage later on, I'm assuming, you can observe a pool over a period of time and see how the liquidity is changing. And when liquidity is higher, utilize that as a time to exit a position if you're using market orders to sell, right? So that's definitely something you could do. But if you're like, say a pool's 100,000 and you're like, okay, cool, it's earning $3,000 a day. You're like, I'm gonna jump in there with 100 grand. And now it's a $200,000 pool and I'm gonna earn $1,500 from that pool. Like, you have to be okay with either side of that, A or B, like you were saying. I think we had some other questions here too that we can pull up.
Yeah, we have other questions. So let me run through a couple of these to feel like. So can you please explain what RH said when he's putting up liquidity on one side to avoid slippage, Sam? You probably didn't hear this, but you can imagine what he said probably. He was basically telling people about DeFi liquidity and about slippage and about why some of, like Ethereum, for example, if you sell $1 million worth of Ethereum, you're not going to get a lot of slippage. It's probably going to be under 1%. Sam, that's remarkable. Remarkable. And we were kind of playing on that, but like if you do $1 million buy on Hex, you might be getting some decent slippage. And if you do $1 million buy on Icosa, you're going to eat redonkulous slippage. And that is directly proportional to the liquidity pool and the graph that will be shown on V3, uniswap.org/V3.
And to graphically show what he was talking about, if you want no slippage, right, you have to use V3. And let me explain what this is. This chart here is the liquidity, right? So this, underneath this gray line at the top, is the liquidity. The red line is the market price. What is this black line here? This is entering a position as a single-sided stake. Sometimes you'll hear range order, sometimes you'll hear no slippage, or using V3 to sell positions. They're all synonymous and they're all talking about the same thing. So this position here is, say if this side here was, say if one side was USDC and the other side was Hex, right? So let's say that this side is Hex. So that means this position is all Hex and they want USDC, right? And this over here is USDC.
Selling with no slippage, guys. Who would have thought, right? Who would have thought?
So now you put in your position. You've got 100,000 Hex that you want to sell, right? So you put in all 100,000 in here. So you just do a position with all Hex, right? So I'll show up the chart, like how to do this in a few minutes or whatever. But basically, you pull in all Hex into an LP position. You won't be earning fees because you're outside of the range. You're over here. You're not directly on top of the price, so you don't earn fees out here. Now, what happens over time? Hypothetically, the price of Hex, right, moves along, and as it goes from here to here, right, it was on this side, now it's on this side. When it does that, now what that means is you are in all USDC, right? Because anything to the right of the red line is USDC, anything to the left is Hex. So you have effectively sold your Hex for USDC and not paid any slippage. You've actually generated fees to do so. So you don't impact the price in the market. You are able to actually potentially profit from selling Hex through the generation of fees. The downside to this, and this would be, if anybody's interested in like building this tool with me, I can help you.
This is directly opposite of what Silver was saying. Like, people make the same mistake on the other end. So as selling with no slippage and having an amazing opportunity for someone who doesn't know what they're doing could have been them putting all their money in and not realizing they're going to end up with a big bag of Hex in 5 seconds. So again, if you don't know what you're doing, it could be considered a bad deal, which is someone else's best deal. It's ridiculous. It's so weird, but it's
that's a good point, because you have left side versus
somebody
right side.
wants that. Somebody wants that. That's on the market. Somebody wants it. Just because you got eaten into someone's position doesn't mean they didn't make a mistake. But they could be excited about it, and you could be horrified. And then the horrified nature of it is what's going to make you wrecked, because you're going to sell or do something weird, but you just ended up do it on ETH-POW. If you don't want to mess up, do it on ETH-POW. You'll learn about impermanent loss a lot quicker, and you won't spend any money.
And one of the negatives about this, and this is a tool that I would like to build if anybody is building shit and wants to like contact me, Instagram's probably the best way to do that. But the issue with this, because if you want to help build something freaking awesome that would definitely get usage in this space that probably Uniswap will copy in the future if we build it, is when you have something like this, right? This is where the price is, and the price moves over this way and sells through here. The issue with this is that now you're all in USDC. But what happens if, say, this transition from here to here, happens over the course of 3 days, and then it sits over here for, maybe there was like a lot of price action, and the price moved, and then it sat over here for 3 hours, but then it came back over to this side here, right? And it sat over here. Well, if you had this position here, right, that you wanted to sell in Hex, well, now you're back into Hex because the price went from here to here, meaning you're all in USDC, and then goes back into Hex. You have to manually go in there, and this is the tool that I want to build. You have to manually go in there and exit your liquidity position, which I'll show you how to do that later in the video. But you have to click a button. If you have it on your Trezor or Ledger or just your MetaMask or something, you click a button to actually remove your liquidity. If you don't remove your liquidity and the price passes through here and then drops back this way, then you're back to square one. Yes, you earned fees, right? You probably earned a decent amount of fees because your position is so concentrated there. But your objective wasn't to earn fees necessarily. It was to avoid paying slippage, right? And not maybe sell against yourself. So doing this, you have to manually go in and remove the position, which is an issue. I see Uniswap should probably see this. They should probably fix this at some point. But if you want to help me build this, contact me on Instagram, links down below, because this is something the marketplace needs that we can put out there. This is effectively a limit order for V3. People think that it doesn't have limit orders, but it actually does have limit orders. LP Ripper. What's Sam's favorite LP pool? I like all the pools. The ones, well, let's touch on this for a second. So first of all, like you were saying, there's two decisions you have to make an LP position. The first is that you want to set up an LP position. So you have to be cognizant that you're taking money that you could hold as a long-term investment and you're putting it into something that's going to generate fees, right? So you have to be cognizant of that. Number two, you have to be okay with whatever asset you're putting these into. So asset A and B. If you want SHIB and USDC, then you have to be okay with holding 100% SHIB. I don't want SHIB. So I don't want to provide liquidity between two assets like that, but something, say maybe USDC and Hex, I would provide liquidity on that because either asset, I don't give a crap which one I have. So those are the two things that I always consider when I'm picking out a pool.
Or you could provide liquidity between pools that you got for free for whatever reasons. Like there's a bunch of pools, man. So just understand, like, it's experimental and risk, just like buying hexes to someone is super risky. Like the further you go down, it's just more risk. But like, as far as the liquidity of the asset that you're dealing with and your understanding of the liquidity, because just not all liquidity is the same. If you see $1 million in liquidity in something on day one, that generally means you're going to get perma-wrecked. Like, because you're not understanding that you just bought into a pool that's completely propped up by one person, and whatever happens after that is you're just at the mercy of that. But when there's a real market with real people, you can understand that they can't all sell at once. Not everyone can be at their computer. Not everyone can understand. Not everyone has their keys. Not everyone knows. Some people have hex stakes for all their stuff. So like, it's important to understand that the staking makes this real long-term too, the hex part. So like, there's just risk factors with all of it. So the next question that I saw was, if you want to get into a low liquidity asset, can you back into the position using LP and earning fees on the way in? Yes, 100%. So you can go in and out of any asset you want But just understand, it's at the mercy of what the market decides. And if you place it at the wrong point, like you're just going to lose. But if you do it right and you put it in the right spot, yeah, you're just going to get sucked right into the other asset either right away, probably right away. Like if you don't, again, I'm talking about how low liquidity are we talking?
But also another way to approach this potentially, I don't know where Jordan's at in this one, might be that like, could you use LP to build another position if that's what he's asking potentially? And if that's the case, then yes, right? So you're like, I like asset A. It has super low liquidity, and I'd like to build a position in that asset. So what somebody hypothetically could do, say there's $75,000 of liquidity, and that generates, $800 of fees a month or per day. I'm sorry, per day for that pool. Maybe that pool is comprised of 63 people. Maybe it's 24 or something, right? Or 10 people. Well, what you could do is you could add $10,000 to that pool of asset A and B, right? And then every couple of days as you earn fees, you could pull those fees and send them to another wallet. And that other wallet is your long-term position. You're like, I like asset A, super low liquidity. Like I understand that you can be flip-flopped in one asset or the other asset, but in the long run, I would like more coins of asset A. Then setting up that LP position between A and B, and every day or 3 or 4 or 5, 7, whatever your number is, maybe you're like, once I hit $100, maybe it's when you $500, whatever your number is. When you hit that number, you can pull those fees. So that $500 is going to be in asset A and B. So you can take B, convert to A. Now you have $500 of asset A that you want, and you send that to a separate wallet. And then 6 days later, you got another $893. Pull that, convert B to A, and send that $893 to a separate wallet. So over time, you can build a position in asset A, which is, it could be what your question actually is here. So hopefully that is actually helpful. I do have, it looks like I have $28 in this like wallet here. So we could run through the calculator, and then we could actually try to set up a position, or we could just go through and try to set up.
What do you guys want? What do you guys want? Like, what's the confusing part about this per se? Because again, you have to understand every little piece of each individual piece like separately before you can kind of put it all together. So I'm kind of curious, where are you guys at? And hold on, there's a couple more questions. If Sam got through to me, and I'm so grateful, only have tiny bags but earning fees on a piece of it and changing my outlook big time. If I can do it, anyone can. Use Polygon/Uni. If you a pleb like me, hey, Polygon gets a lot of volume, and I'm pretty sure Cristiano Ronaldo or some crazy stuff just went on over there as far as some affiliates for them. Facts, we talk LP, but some of us really haven't mastered it. So a good step-by-step vid tutorial is great. But understand, there is no step-to-step tutorial that will get you through.
But
no, but like you're gonna have to listen to it 15 times. Like it's not. There's nothing you're gonna listen to once. This is about weeks and weeks of focusing kind of on the subject. Like you have to kind of understand and focus on a few different aspects, like deck screener, like some videos, like this show, like probably practicing on ETH POW. Maybe if you have more money, practicing on ETH because you're not so worried about the fees. So like if you got money like that, like you got a lot of room to work. And if you don't, you got ETH POW now. So good luck. Learning like I did.
On that note, like, yes, you probably have to like read and or listen to it several times. But if you are interested in learning more about that, and I'm not saying you should or shouldn't do it, but just from an education standpoint, you can check out my channel. I have a playlist on LP on V3 that's, in my opinion, far more comprehensive than like that vast majority of stuff out there. Better than like a lot of stuff that people pay for, but it's all free. So like there's, I don't know, probably a couple hours worth of content that you can go through and just watch those videos to learn. I have walking through step by step, which we can actually get into in a moment. Did you have any more questions you want to jump into real quick before we jump into setting up a position?
And Silver said, you have to make an earlier time slot for me to join, but I love the topic and can add a lot to the stream. Last was just a test question, but I do run large LPs, many variables to consider into macro. Absolutely. So many variables. LP is full of variables, and me and Sam love variables because it prices everyone out because nobody likes to think about this. This is new to me, but I want to learn. I want to see Hex and ETH setup. Well, if you want to see the Hex and ETH setup, Sam, why don't you go to the V3 liquidity kind of shower first, if you don't mind? Because you're good at talking about it. I think once people get a grasp of that, they can kind of do it without spending money as much, Sam, but it takes a while to get. But it's good to start showing over and over again. So why don't we start with what did he just say? Hex and
so I don't have any Hex in this wallet, but we can actually go through and show people who have never.
Yeah, whichever pair that you got.
So this is your
whatever. Just look at whatever you want to do. Just do it.
Yeah. No, this is perfect. I'll do Ethan Hex because that's what I can. I have about $28 in this wallet, and it's not like this is obviously not one I use for anything. So you go to Uniswap, right? This is what. Let me refresh the page. This is what it's going to look like, right? When you come to this page. If you've never purchased or used Hex, you're going to have to like search for Hex or grab the contract address for Hex. So you have to like have a smidge of like understanding of how this works to start with, or like go to Etherscan, look for Hex, grab the contract address, put it in here, right? Assuming you've gotten that far. Let's convert some because we want to set up an LP position. So these are the steps you have to go through. I'm going to convert $12 of Ethereum into
let's check the fee. Is it going to hurt? What do we got?
There's no slippage. Well, that's because there's no money here.
Well,
from my
no slippage though. I mean, that's cool.
For
I like trading with no slips.
I think I'm gonna run out of money.
The fee?
$8. So I'll probably run out of money.
Guys, donations are open. He's wrecked. He just got wrecked on that one. But I'm trying to show people like in a small microcosm. Like let's say that this is all the money that we have, and all the numbers are different. Like you get if $8 is any 1% of your bag, that is a considerable thing to think about. If you're going to have 4 or 5 transactions, you could be looking at 4% of your bag if you're not focused up,
or way more than that. Like
that's like minimum normal, maybe. Like
in what coins do you receive fees? Whatever coins you choose to provide liquidity in. So in this example, I have the Ethereum and Hex pair. So that would mean if GRC is like, hey, I have Ethereum, I'd like to buy some Hex, he pays the fee in Ethereum. So he pays this fee here in Ethereum. Now going the other direction, if somebody has Hex and they want to sell to Ethereum, then what they're going to do is pay the fee in Hex. So what fees do you earn? You earn them they're denominated in the tokens that you provided. So Hex and Ethereum. So this is what would happen. So all I did, right, the transaction went through. So now I have some Hex. You go pools, you click new position, come over here, and now we're going to click Hex. So we have Ethereum and Hex, and I probably won't have enough for gas.
And Sam, is there no way to access this chart on ETHPAL because it's not the official? Like I know when I have the ETHPAL experience, you don't get the chart, so you kind of have to go off the numbers, which you can write down, and it only takes 2 seconds to think about it. But it is annoying if you're not familiar with the asset super intensely. So this chart is everything to V3. And I'm not saying as far as if you're making money, you need to see this chart. Like you need to understand what's going on here, and you need to understand about how much some of these guys are making in fees, so you can get a good idea of how these ecosystems really function.
And so this is like, by the way, to answer your question, yeah, they need to update it so we can actually see the charts, or there could just be such little liquidity that it hasn't been able to show in.
I think that would probably be it, Sam.
So this, if you're using ETH V2, or if you're using Sushi Swap or Pancake Swap or any swap that's not V3, you have to provide liquidity over the entire range, which just means that it's garbage from a capital efficiency standpoint. But we're not gonna actually do that. We're gonna provide a concentrated position here. So this right here, see how there's some blue outside of here, and there's blue outside over on this side. That the blue is if I do like a full range, I'd have to go over the entire price of possible prices from 0 to infinity.
Now, at what price levels would you be making a decent amount of fees? Like if you put $1 million full range, like are you going to be making a decent amount?
That's a great question that we can get into as soon as we're done with
Yeah,
this.
sorry.
No, that's perfect. That's a good question. Let's pull up the calculator and see. So what I'm going to try to do, this is as, so say if I wanted to provide in this range, you can come in much closer if you like. You can provide much closer range in here if you want to do that. Now, I don't think this is going to go through because I don't think I have enough in here. So let's just try to do like 100 hacks, right? Which, if you're doing position this size, like it's not going to make sense. Fees are going to eat you alive unless you're just doing this to learn, right? So we're doing this with 100 hacks and $2.48 or 40 cents of Ethereum. So we're going to go through and approve hacks. My MetaMask is loading. I have to confirm that. Once this transaction goes through, you'll actually see what it's like to set up a real LP position. This is actually in the market. $25 later of fees if it actually goes through. I might have run out of Ethereum. So that's just went through. Now we're going to go through and preview this. So it's going to tell you in terms of hacks, you could switch it in terms of ETH. Effectively, this is saying at the low end of the range, you have 32,354 hacks per one Ethereum. So that's at the bottom end of your range, or what you would sell for. At the top end of your range, you would sell 45,000 hacks, 45,000, a little bit over, for one Ethereum. So you're going to provide in that range liquidity. We're going to press add. You're getting another confirmation in your MetaMask, and it says I have insufficient fees. So I actually won't be able to actually go through and finish this because I don't have any money in my wallet, in this wallet here. But that's effectively how you'd go through. Let's see if I can get cheaper fees and try it again. No, I don't have any money in this wallet, so I can't actually complete this. Let's see if we can.
Do you mind going through the chart and just showing people? Because this is something that took me a second. So I think and assume that I probably spent more time on it than others. So looking at those charts, Sam, it benefits me a lot. Like that chart right there, I can extrapolate almost everything I need if I have the rate of both assets and that chart right there. So that's important to understand, because unless some of that liquidity moves all of a sudden, which is important to pay attention to, you're going to see like you can really figure out everything, because this is the money that's in and out. So like this is what we got here, and you can figure out by these charts and looking at them all the time whether you should be worried or stressed about upward price action potentially, Sam, and maybe downward, but the downward's a little more complicated via like price targets get changed and people move liquidity. But on the upside, Sam, I think you can start to catch a pretty hot beat on the upside from these charts. Don't you think?
I agree. It definitely gives you information. And if you're looking at it for the first time, it's not going to make any sense to you. But like, I want to tie this back in and then get into the fees portion of things. You guys remember this chart here, right? This was no slippage, right? We don't want any slippage. Well, let me show you that in real life, like what it actually looks like. To do that, this is uniswap.fish, F-I-S-H. What we're going to do is going to go to the Hex Ethereum pair. We're going to look to see if anybody's trying to avoid slippage. Now, what do we want to see? We want to see a singular point, right? Like the chart that I drew for you. Well, it's probably hard to see unless I can make this a little bit bigger. There we go. See this little point over here? This, my friends, is somebody that is trying to sell their position and using no slippage. That's what the singular point is. These other points here are the concentrated positions. And like GRC was saying, you can get a measure of the concentration by looking at this, or like how inefficient it is, or like things like we looked at PLSD the other day, and there's fucking no liquidity there. And it's
odd. I just like to call it odd liquidity. Like it's like I've seen I've seen assets with that amount of liquidity that look fine. It's not like the amount as much as like the naivete that I see. Like it's almost like, what is this chart doing? This one makes perfect sense to me. People are earning fees at a nice tight range here and getting a great deal probably, and with some serious predictability there now. Like we're seeing that $3 price range really have a hard time going under that. So I mean, what do you put it at, 2 cents? Are you really worried about downside at 2 cents? Maybe, but like I think you could make a move on switching it before we would see much devastation lower than that. So I just think like Hex is cool. The liquidity of Hex is cool. Like I think it's cool. I think it's safe. And I think it's nice and plump for people that really understand what's going on here. And if you want to make some passive income, I think it's a good option as far as decentralized finance has provided us with these tools. And I don't see many people taking advantage of them. And Sam, I think the future of these pools looks radically different. Like I just think the future of these pools unrecognizable comparatively, because just well I do, nobody understands this stuff, Sam.
I agree. Yep, you're correct. They're definitely to be evolving, because if you can earn 1% a day, or even a quarter of 1% a day, people would want to earn yield, and they're going to come in, which then reduces the yield into these. Talking about yield, think about this. If you have a $10,000 position and you chose this range, this green line here to this green line here, this is the range you're going to provide liquidity in. The fees you're going to earn are about $23 per day, right? So let's do the math on that real quick on a monthly basis. That's 7% a month.
And how much on both sides did you do? Like, what is that? Like $4,000 or something?
5,000 and 5,000 basically.
Oh my God. I didn't see that part of it. Sorry.
No, that's right. So, but think about this, right? And I like Hex. Like, I'm not trying to say this in a negative way. 38% on Hex annually to lock up your shit and not have access to it for years to come. Or you can
whenever you want, not years, but whenever. Some people have really fat Hex stakes that they stake for a few months, and that's really like low pressure. Like,
but if you want to earn 38,
you need a lot. No, but I'm just earning a great return. I don't think anyone really cares. Like the numbers are all there, but they just want to know how many US dollars they're going to make. Like, and I think this is a cool way to like have an actual count. Like, it's nice to have a count, Sam. Like, you can actually write down the numbers of what you've earned. That is incredible, Sam. I'm sorry. The numbers that we get from this are so amazing. Like, you can see every digit of every transaction with every percentage, estimations, rough, and the actual fixed number that you get at the end of the day. So I just think the tools that we have here are so awesome. And I just want to be on the charge of teaching people about these tools in particular, because this is what the rich guys don't necessarily have the time to tell you, because this is how rich people make money. And that is the truth. And if this is it's the truth. Like you guys ever heard of the casino makes the house makes the money? This is the house. Like, Hex has been sideways price action for hundreds of days, and somebody's making thousands and thousands and thousands of dollars a day on that. It's less about the price action sometimes, and it's more about your understanding of the fluid system. If you're a degen, like in the weeds kind of guy, staking is amazing because it stops most people from doing the thing that most people will do, which is sell their bags.
Yes. And so one of the things that you could, so say like somebody really likes Hex and they have $10,000 and they're DCAing, right? So they're DCAing, $500 a month, and they have $10,000 currently, right? So every month they're buying $500 worth more, and they have $10,000 in there. Well, here in the example, somebody, I think Jordan had mentioned it earlier as a question, you could take $10,000, put it into an LP position, earn $23 a day, and at every $100 mark, you could pull that $100 out and just convert it all into Hex and send it to a separate wallet to build a position. Or if you want to do a concentrated position, that's what these lines here are, right? Remember how I said when the price moves outside the range, then you're all in one asset. So you can do these like this, and that would be a range order, or you can just bring them slightly closer together like this. And now let's take a look at the fees, because your capital is distributed over the range at a thicker level than just spreading it out. Think of like if you have a baguette, right? The French bread that's like toasted, right? If you have butter on the baguette right? It covers that whole thing. Now, if you take the same amount of butter that you put on that one baguette and you spread it over an entire giant loaf of bread that was cut in half, you're barely going to have any butter over the whole entire loaf. That's how you can think about concentrated liquidity, except for you're only going to earn liquidity where the price is. So if it's right in the middle of the baguette, you're going to earn the most by putting it all into the baguette. It's going to require more work, but you're going to earn higher fees. How much higher fees are you going to earn? Well, we almost doubled our fees from $23 to $45, and from 7% per month to 13% per month versus 30. By the way, I checked my Hex stake that I did almost a year ago, and I'm still not earning 38%. Right? I put it in there.
38% of Hex.
Correct. If you look at your, the Hex stake app or whatever, or Hex, .go or whatever it's called, .com or something, and I checked the Hex position that I had, and it's still not earning 38%. It was like 31 or 32%. And that was from a year ago. So like the 38% is not really what you earn.
Well, you just technically get 38% of Hex per T-share. So yeah, I guess you're right. If the more pinched off that is, the more diluted it. If it's under a T-share, which it might be, because I know you told me you don't stake. You probably just did it for.
But it'd still be representative because it's just math, right? So if you have one T-shirt,
so the Hex number is like 32%. Rather than
we'll say it's about 32%.
Yeah, of course. And then some people get more too. Like it's like sometimes I look at my old ones and they have like way higher than that, and I'm like, what the fuck? So but again, it's on average. That's why we don't really want to post those numbers anywhere. Like those are just like rough numbers. Like they're rough. They're rough because there's end stake fees and there's additional value that comes in, and like so it's just dependent on a couple different factors.
Yeah. So let's see. Does anybody else have any?
It's nice to have, like, when a year or two goes by, you'll look back and, and people will say, oh, I'm glad I have this much Hex because it does a lot of the work for you while you're not doing nothing, which is nice.
Yes. There's other pairs, like if you just like Ethereum and USDC too, you don't have to do Hex. You could do any other pair or wrapped Bitcoin or anything along those lines and see what it actually comes out. There is an IL calculator in there. Yes. Uniswap just tweeted about that the other day. I was going to do a video earlier this week on it, and I haven't done that video.
No, actually, the tool you're using now has it.
So correct. Uniswap tweeted about it earlier this week, and I was going to do a video about it.
No. I'm saying what the website you're on right now has it as well.
That's correct. This is what I'm saying. Uniswap tweeted about it earlier this week, and I haven't done a video on it, but we can get back into it and play with it right now.
Yeah, let's click on it. It's pretty cool.
Okay, the site's freezing, or my computer's freezing right now. So let me see if I can refresh this and get back in there. IL is impermanent loss. So if you don't know what that means, effectively, it is you have asset A and asset B, and asset B goes up by a 10x and asset A goes up by a 2x. You're left with the 2x, not the 10x. In very simple terms, that's how it is. You could have had a 10x if you just held the position, but you only have a 2x because you decided to put it into LP. And
people don't add to that because they don't want to talk legit. Is that okay? I just lost that position. Let's say I earned $700 on that position. I can just buy back the cheaper asset with that $700 because clearly one of them went down or the other one went up. And so you can use the fees. You can use the fees and actually buy back the cheaper asset because remember, one of our criteria is that we like both assets. Period.
And right, you have to be okay with that. You're correct, 100%.
You have to. So that's part of the criteria. So we're not adding liquidity to assets that we don't want both sides of. That's not smart. That's what dum-dums do. Don't be a dum-dum. Unless it's free coins. If it's free coins, you just do whatever that your little heart desires with it. But when it comes to, using your money, like you want to know what the assets that you're deciding to choose and have trust in both sides of them. So and the math is volume related, guys. So like, remember the math that they post as the numbers, it's volume related. So if there's like a mass wave of volume, those numbers are going to go up crazy. And if there's like some sort of blackout where like there's a nuclear bomb, Sam ain't going to be making much on fees. I can promise you, because it's volume. It's that every time someone makes a transaction within the pair, you earn a piece of the fee. Understand that. So that's what's going on here. That's the innovative technology here, really.
You're correct. What
It's amazing.
what do we know without like some catastrophic black swan is going to be
Monkeypox.
over the next couple of years? What is volume going to be higher or lower in the next couple of years?
Well, I can't tell you when, but I can tell you that the volume even now is higher than I've seen it at some different times. But the US dollar amount is definitely not higher right now. But even on Ethereum, there is good volume. You saw Zen come out, Sam. You saw a lot of action over there. You saw people doing stuff. You saw that there was potential energy and kinetic energy. I don't care what everyone says about the bots. Everyone was spending money on Ethereum. That's what they were doing. I don't care what it was on or what it was not. And they continue to do so. And it's an interesting thing that Ethereum is the top dog. Do not remember the top dogs can top dog and do some crazy stuff sometimes. But there can also be restrictions. There's a volatility risk here is galore because 750 ETH would not surprise or wouldn't shock anyone. It would surprise a lot of people. It wouldn't shock anyone. And, you know, I don't even think $500 ETH would really shock anyone as far as shock factor. We get over those little shock factors quick and, you know, things find a new psychological level really quick. People got comfortable with 3-cent hex really quick. Like, I remember when 25-cent hex was like a deal. And I remember the guys that were shilling it too. And a lot of those guys are gone. And that's because we were dealing with a real asset that was really tied to other things. And we really have to pay attention to the details here, Sam. And I really don't think my channel will go down because I really do want to focus on these details as much as I possibly can because I think it's the bread and butter here.
Yes, bro, this is I haven't played with this. You're right, though. You're 100% right. I haven't played with this, but let's punch in some numbers here. Let's say that Ethereum goes down to $1,000 over a 20-day period of time, or let's say $1,100. $1,100 and let's say $1,350 over the next 20 days, right? Super volatile, highly likely, right? So I'm just reading through this. I have not read through their tweet. At some point, I will do a separate video, like deep dive, like they did a blog post on it too, to go through this. But strategy A, and this is just HODL. So this is primarily holding USDC. Primarily holding Ethereum and a little bit of USDC, and it looks like you get 11% versus the strategy B, which is Uniswap, right? And that would be 17%. So you get to see here that it is
incredible.
Yeah, correct. I agree.
Incredibly good tool.
Impermanent loss would be $58. Because so one of the things about impermanent loss is like A and B, right? B goes up by 10x, A goes up by 3x. So you're like, oh, I'm left with the 3x. I could have had the 10x. Yes. But when you go into these positions, you don't do it with your whole portfolio. So like, remember, you have to be okay with putting money into LP. I said this is 6 minutes ago or 12 minutes ago. You have to be okay with putting your money into LP. So I personally don't think it would be an intelligent strategy necessarily for most people to use more than, say, 20% of their bag. Because if you're using a large portion of your bag and you get the feelies about like your position could have had 100x, right? But now it only had a 24x on it, right? And that's going to get you all butthurt. Then you should not do this. And I'm making kind of light of it. But at the same time, there's people who get depressed about this stuff. There's people who get like stressed out because they're like, damn, I had 100 grand and I could have had 10 million, but now I only have 1.7 million. And they go through the regurgitation of shit that they've done in their life. That's the same thing as like you dwelling on the relationship you could have had with the hot girl in fucking high school and you didn't, right? It's the same exact thing of like, hey, I could have had that job making 7 figures, but I didn't. Right? And then you're doing the exact same thing.
And there's a lot of people saying that I also wanted to quickly highlight that, like, if this is a little too much for you, like, there's people in the Hex community that staked a lot of money that if they put their money in Pancake Swap and Cake and just did V2 liquidity providing, they probably would earn more than they're earning on their job, like by a long shot. Like Sam is new, so he doesn't have to deal with like the less, Sam is Sam. But in V2 liquidity providing is easier. That's frankly true. Like it's easier and it's less risky and you just earn less. But that's only to say, I mean, you can earn more, but you have to be in a very new pair that is going to be explosive in the future. But anyway, if you, let's say you have 20 grand in Hex and 20 grand and, or whatever, let's say you have 40 grand and you go over to Pancake Swap and you do Cake V2, and I'm just doing the V2, V3. So we'll go over to Pancake Swap for the V2 talk, and you'll probably earn an S ton. And I actually know a lot of people that do that, and they have a lot of volume over there from over the years, and they earn, Sam, good amounts of money from the stuff that they've had in there that they got at valuations, Sam. Some of these guys got this stuff at valuations of 2 pennies. And they sit there all day and provide LP because, you know, sometimes you don't have to go major risk V3 or like learning that when you just bought the stuff at such a low valuation, Sam, that it's almost ridiculous. So
again, is it primarily from LP, or is it because they got it at 2 cents?
USD price appreciation. That like they got in literally when the thing was like a couple, because you know about Cake at this point. It was like the first V2 to really just soar, like go nuts, do crazy things. And yes, there's major volume in these things, but Sam, earning yield is earning yield. And depending on how much money you have and how risk averse you are and how much you want to focus, dude, if you plop like Zen and ETH, or I mean, BNBP and BNB in this pool, and you are the whole pair, let's say you're the whole 400 grand, you're earning $8,000 to $15,000 a day or some like when it was crazy. I remember they were mentioning that was like a crazy day, like 15,000. And that's crazy, Sam. So you have this new pair that people are trading, and it has some validity through the fact that it's decentralized gambling, right? So we kind of like that, the stickiness to that. And then, Sam, you earn fees on the actual LP pools, which people are going to trade into. It's pretty remarkable, Sam, all these options that we have on all of these chains.
It is. And
I think you should look at some of that stuff a little bit more, just a hair. Just a hair, just to get some of the numbers. I'm just asking that because I know you'll get
for V2s.
Just V2s around the block. You know,
so that was what I originally started to look into. Actually, was because if you understand CZ and I don't claim to say that I fully understand it, but his ethos seems to be that he wants the space to grow. So he invests into the space at a bigger level to try to grow crypto, but he also invests tremendously in education. And remember that chart where it was like, I told you about it was like, if complexity goes up, the number of people involved goes down, right? Very quickly. So what's simpler? If there's a shitload of education, very simple to understand, not very complex, this is Pancake Swap. And there's also literally lower fees. You literally earn lower fees.
And this was just V2 Uniswap, guys. So just remember that, just so everyone knows, because guys, if you don't understand everything, we got to remind you about some of these pieces. They're critical to understand. What is V3 liquidity providing? We talk about that is something that Uniswap invented that added on to the bonus. Added on features to the original liquidity providing situation, but they're separate pools. Okay. They are separate pools. GRC can't figure out how to get in and out of those pools super easily on V2 Uniswap. I'm still trying to figure out how to do that. There's some sniper deals if you can do that. Literally sniper deals. So it's important to understand that this, and remember, Binance is a fork of Ethereum. So yes, they don't have the V3 option yet, and they probably will. And I'm sure there's some nuance there about why. But I don't think the users on Pancake Swap want it. And I don't think it would benefit Pancake Swap right now, Sam. I just don't. I don't think that market is mature enough. I think we're that early, Sam. That Sam doesn't even think his users will use V3. So it'll be more plump but Uniswap users are very different. Uniswap users are like the higher level of the crypto dorks.
V3 is, you definitely have to, you gotta really
see why Binance wouldn't jump all over it, Sam.
Well, that was why. So the reason I didn't do Pancake Swap. You can earn like way higher than you can in hacks, no problem, right? There, if you pay attention, there's also potential where you earn way less depending on what pairs you're picking, right? But with V3, you can easily earn way more than you earn in hacks, right? And so when I looked at that, I was like, wait, I want to earn more returns, not less returns. And V3 allows me to do that, and it's more complex. So what do we know about complexity? Complexity goes up, the number of people involved goes down. So I was like, cool. If I understand this, then that means a lot of people won't understand it and won't even take the time to get understand it. And that's why I'm going to earn a higher fee.
And I don't think anyone understands V2 liquidity providing, Sam. And I think we're that early. And like, I know you think that it's like a huge jump intellectually, but I'm starting to think that no one understands really any of it that much. It's easier to like do on V2 because you can just do it and leave it. So that's a factor for sure. Like there is just like a leave it factor there. But Sam, I think you could really make a push in DeFi if you started making videos comparing V2 and V3, because people just need to know. Like, and again, they don't need to participate. Nobody understands that these are different pools. Nobody understands that V2 and V3 are completely separate US dollar, like in the pools there. So it's important to understand that, I think. And I think it's important to really understand that's what we do on this show, at least.
Have you ever heard of FIRE in terms of you as or anybody else that's like listening? FIRE is an acronym for Financial Independence Retire Early. So there's lots of like Reddit like subgroups and groups on FIRE. There's a bunch of different books, bunch of different podcasts, tons of YouTube channels. And there's this famous study that is talked about in the FIRE community. It's called the Trinity study. And what they covered, and this is in relation to legacy markets, right? But what they covered in this is that you can safely withdraw about 4% of your portfolio value per year to live on. So you can use this to calculate how much you need to retire. So if hypothetically, somebody needs $40,000 to live off of. I don't know about you guys. I can live off of $40,000, right? I can live off of far less than $40,000 and actually save and invest to grow that. So assume you live on $40,000 a year. How much do you need in retirement? And I don't know why this isn't taught in school. Financial advisors will tell you, oh, it's all this complex stuff. You need to come in here for this wizardry and I'll teach you. And you don't know if it's right or wrong. It's fucking simple. If you have $40,000 that you need to spend money, to buy groceries, to pay your rent, to do whatever it is, take that number multiplied times 25, which is the inverse of 4%. That gives you $1 million. However, when you think about this in legacy, that Trinity study, they were comparing it to something like earning an average annual yield of like 7 or 8, 9%, right? Because that's what the stock market's done. However, in this case, instead of having $1 million to generate $40,000 annually and not touch your principal balance, this right here is $250,000 between USDC and Ethereum. If you have that, so just hypothetically, not financial, you should not do what I'm about to say. If I had $250,000 in a 401k that I just had sitting there, I'd close my 401k, pay the taxes, pay the fees in the most efficient, effective way possible, take that $250,000, put it into this pair, generate 20 grand a month. Say you pay 50% of that in taxes because you live in New York City. So you're paying New York State taxes, you're paying New York City taxes, or maybe you're living in California. We'll just assume you pay 50% in taxes. So you pay out of your $20,000, you're paying $10,000 in taxes. So you took your $250,000 and you can live on $10,000 a month by just providing liquidity. Like, this shit is amazing. This is one of the biggest breakthroughs of crypto that people don't realize, because
it didn't happen that long ago, Sam. Like this isn't, so I think that's important to note too. Like, we're in an industry that's brand new. We learn it every day. Everyone's fallen along the wayside. Everyone's given up. Everyone's quitting. It's just another bear cycle in finance, Sam. It's classic MacGruber, but this time we have all these tools and we have these liquidity pools that we understand. You can't take that away from us. You cannot take this knowledge away from me. If someone at any point in my life gives me $10,000 for whatever, whether that's work or something, I can now generate income for the rest of my days while I'm picking my butt on my computer. That is critical to understand. That is human, real, financial innovation, Sam. Real innovation. That's why I know this is going to work, because this is truly innovative. And I know that's one of the criteria for things working long term. True innovation. Is the tech there, you know?
V2, yes. And this is to your point of innovation. V2 is garbage in terms of it presents a market of liquidity that is not accurate if you have an efficient market. That's why I say it's garbage. In an efficient market, we just looked at charts. What did the chart look like of actual liquidity? If you understand liquidity, it's going to consolidate around the price. Same thing happens in London and New York. Why does it go there? Because it consolidates in New York City, right? It consolidates in London. That, my friends, is changing. Well, it always consolidates around the price. V2 forces it to be not that way. Anytime you have something in the market that forces it to not be the most efficient way, that is not necessarily a good thing. It is not a good
Yeah, I
thing.
love what you say force there, because it is a bit of a force. Like, what's CZ doing? Whether it's copyright or whatever, like the opportunity to make LP funds on PancakeSwap is via V2 right now. And I actually think that's the best decision for them at this point in time. I don't think they're there yet. I don't think that market is mature enough yet, because frankly, Ethereum's market is just hardly mature enough to deal with the information. And Ethereum's market's pretty mature. As you can see, the buys per transaction on Ethereum are much larger. People are willing to spend that gas fee. Why? Because they see future promise with DeFi innovation with Ethereum. Everyone else just copies it, right? Other than Charles and a few others, of course. And we'll be talking more about Cardano. We'll be talking more about Polkadot. We'll be talking more about all these things as we go forward. We had a great show, Sam. I mean, we could talk LP all day long. It's so much fun to talk about. There's so many variables. It takes so much nuance, concentration to get involved. And that's why me and Sam love that, because that's what we're good at. Like, we're good at staring at something and doing it over and over till we get it really fast. And that's what this market is all about, especially if you want to take advantage of some of these tools, because Sam knows it. I know it. You're not going to get the same amount of money doing fees this time next year. Sam knows that to be true in his heart, and I know that because he knows there will be more liquidity. He knows there will be less money for him. He can't outpace 100,000 people, like, so
Per quarter, per month, per day that are coming into crypto. Correct.
Exactly. You can't outpace anyone. That's not how life works, right? Like, we see how V2 kind of worked. The amount of money people made on V2, Sam would have been just as excited when V2 came out. The amount of money that people made on V2 on CakeSwap before anyone understood was out of this world. Why? Because they didn't know what they were doing. But now on Pulse Chain, we have an opportunity to understand V2 liquidity providing, if that's what we have to do. And being early to that can be very fun. I don't know how it's going to play out. Now, if on Pulse Chain, if they slip all the liquidity in there right away and make it real nice and plump, I'm going to be a little pissed off, right? Because I'm going to be pissed off because everyone else got the opportunity to buy the bottom of all this shit on the other chains. And because the liquidity wasn't stacked all under it right away, right? And on this one, I'm worried that there's so much real US dollar involved already that liquidity is going to slip and slide right in there, and it'll make people happy, yes. But the guys that were assuming they would get the same opportunity on these other chains might be wrong, and I have to think about that as well. I've seen real liquidity slide in $1 million like it's nothing. And I know that there's a lot of money in those wallets, and I don't know what they're going to do with the liquidity. They might pair it up right away. Boom.
Well, what do we know about innovation? That it trickles down to all areas, right? So say when there's a cool new feature on a, this is Android, but say if you have iPhone or whatever the case is, they tend to have some very good quality stuff where the most innovative stuff might not be from them potentially, right? Well, that innovative stuff eventually trickles throughout the entire marketplace, right? Well, if you understand that that's how technology works, that's how innovation works. It starts here, might be a higher price, right? Then I get higher rewards by doing V3. You don't think for half a moment when you understand that V2 artificially makes the market less efficient, that will go away at some point. Everything is going to be V3. whether that's in the next 3 months or in the next 36 months.
Whenever it can happen, realistically, it will. Now, we are in just this much of an immature market that it's like maybe okay that it's not happening right now, but I can guarantee you this stuff's on its way in. Richard mentions it already. I'm in Richard's DMs talking about V3 liquidity providing all the time. He never answered me, but that's because that's what I want to know, because that's where the innovation lies, and that's where people need to understand why people will use these markets and what's fair and what's proper. And we have the opportunity, Sam, to watch this stuff, whether people believe us or not. I'm going to watch this stuff as closely as I possibly can, and I'm going to call it fair game if I see it's fair game. And if I don't, if there was misleading, because I remember when they were talking about what would happen, Richard was pontificating on what could happen to the pairs on the other side. I remember exactly what he said, every single word of it, 100 times over. And if I see some weird ass shit, I'm going to say it. And it doesn't mean it's bad. It doesn't mean that I'm right. It just means like maybe this is what is the reality of what I've experienced as I've gone through this. And if you love this liquidity providing content, we're going to be doing this like all the time, because right now I ain't talking about SBF's dumbass anymore. I don't care. He's horrible. He whatever. He's sex cult. I don't care. I don't know. He's the weirdest dude ever, but I ain't giving him any more attention. I'm sure the Democrats will take care of him, however, or that he'll just get killed in jail or whatever. So, but if you love this liquidity providing content, if this is blowing your mind, if this is taking your experience to the next level, make sure you're tuning in every day. Our numbers on this show are going down as far as the viewers because of the bear market. Everything's going on. But our attendance in the chat and the minds that are working, all-time highs. So, and that's what me and Sam really look for. We know there's trends and like people watching, like, you know, like there's 500 sometimes when nothing's going on, and there's 100 sometimes when me and Sam think there's huge innovation going on. It's like I can't call that shit, but I can be here every single day at 11 a.m. Eastern, giving it to you all the way raw, all the way real. We're not cutting corners here, Sam. And it's not always easy, Sam, to show up and strap up every single day, but now, you know, it's worth it.
I agree. And if you guys do like this stuff, we'd like to come out with this kind of content on a regular basis. Don't always cover some of like the stuff that you might think is like mainstream media, but we cover some of that stuff, but also very nuanced stuff like this that nobody else is talking about on the internet crypto space at this level of detail or with this much experience on this kind of stuff. So tell your friends about it. If you have other friends in crypto, share this with them so it can provide value. Check out our links down below if you'd like to support, or check out on Instagram or Twitter or other places. I post on Instagram regularly. GRC is on Twitter a lot more than I am. Lots of places to check us out or support us in other ways.
My last closing before we go is, yes, make sure you hit the like and subscribe. And how do you get wrecked, LP? You don't really get wrecked. It's more of an emotional response to the size of the bag that you have. So if you put up a pair that you don't understand, that you don't think might have real value, that you think is flimsy, that you don't have future projection on, and you end up with all of that providing LPV3, you're probably going to get really butthurt and you're going to sell it all, because you're just going to be like, I made a mistake. But really, you didn't make a mistake. You just interpreting what happened in a certain way. So you don't know if you made a mistake yet. Nobody could know that. But there's somebody else that would make that exact same mistake and be extremely excited about it. And you have to understand that it's your mind that is in control. It is not the numbers on the screen. It is your mind and the way you interpret and react to these things. Because I can promise you, when my bags go to zero, I can give a fuck, and I'll probably do the same exact thing that I would do today. And it wouldn't bother me. Why? Because I've seen it happen over and over with these volatility, 90%, 95%. Going up to the moon, all the junk. You guys know all the junk that I'm talking about. So hit the like, hit the subscribe button. Don't listen to all the hate on the internet, guys. I know I talk crap sometimes, but I don't hate nobody, and I hope everyone does fine. You know, I don't wish ill will on anyone, and I hope that everyone is being honest and has honest intentions is being just truthful, and we can do the best to make everyone, you know, move forward in the best way possible. I think DeFi will take over, and I think we're all going to be extremely happy in the future. Sam, great to see you.
Peace.
You already know what time it is. Crypto in the morning. Crypto in the morning. Crypto in the morning. Waiting on phone. Crypto in the morning. 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 Waiting on phone. Crypto in the morning. Crypto in the morning. tuned in. Got me some hacks and I'm making a stake. Got me some heads on, I'm making it rain. Pay me some maxi and that's just in case. Gym rat sent me to show you the way.